Tesla stock is one of the best buys in stock market history. I'm going to give you my full DCF valuation of Tesla in this video to find out. Buckle up, we're going for a ride. By the way, I'm Brian, the Finance Ninja. First, I'm going to go over Tesla's business, the positives and the negatives. Then I'll go over their financials. Then I'm going to go over the valuation and what I think Tesla is worth today. Let's go. Oh, by the way, Shama says to like and subscribe. So Tesla stock currently trades at $171.05. Let's see, market cap $545 billion. Now just look at this 5-year chart for Tesla. It's a roller coaster. Tesla is down significantly from 3 years ago. 3 years ago, that's a long time to be bag holding for Tesla. But past performance does not equate to future results. So let's take a look at the quick history of Tesla and a little bit of statistics here. So a trailing PE of 40, that's actually not bad for a growth stock, but is Tesla still a growth stock? That's what we'll discuss today. Have they stalled or are they still a growth stock? Okay, the man of the hour is, well, the man of every hour is Elon Musk. Okay, the thing about Elon is he's basically the key man at Tesla. He's the guy in charge. And okay, I'll just say this. If Elon were to leave Tesla or step down from his role as CEO, I would sell my shares. I'm just going to say that. Obviously, he has a lot under his belt. He's got Tesla, he's got SpaceX, he's got Neuralink, and many other projects. He's got XAI, and many other projects. It's just too many, honestly. A lot for one person. But he can handle it. Okay, so the thing about Tesla is they just released the Cybertruck. And this is a popularity beast. You know, the Cyber Beast. I mean, you have celebrities giving the Cybertruck free advertising. You have Kim Kardashian, Jay-Z, Beyonce, Jay Leno, Serena Williams, Justin Bieber. Just the names go on and on and on. And each of these, you can just see it in the picture here. And this is all free advertising for Tesla. Of course, you've also got the Model 2 that I like to call it, which is also the compact car. This should start being produced in late 2025, but honestly, given Elon time, probably more likely 2026. See, the thing about the Model 2 is it's a whole new way to build cars. Not only does it have manufacturing improvements in nearly every category, the biggest thing for me is its modular design. It's going to be built unlike any other car in history. You have all the components built separately, then you're going to combine them all at the end. And basically just fasten it all together, bolt it all in, and it's ready to ship. And it's going to use about 40% less factory space than their other vehicles. So this will be able to produce much more income per amount spent on factories. So the return on invested capital will be huge on the compact car. Now, what else is new? We have the Robotaxi, which is unveiling on 8/8, which is a huge new boost for us. Now, the thing about this is actually in response to the Reuters article. Reuters claimed that the compact car has been canceled, which Elon said that they lied. Now, the degree to which Reuters lied, we do not know. We'll find out soon. Also, France said, don't believe everything that you read on the internet, including myself. So just take that as it is. We'll know more on the earnings call in a couple weeks. I think it's next week. And also, is FSD version 12. Version 12. This is going to be massive. It is massive. It's already massive. It's been massive. It will be massive. And it's getting new releases every 2 weeks. Here's just one quote. I feel sorry for people who don't understand Tesla FSD. I tried version 12 for the first time today, and it's like magic. Kathy Wood has Tesla over $2,000 per share by 2027, and most of it is based on Robotaxi. Given the likeliness of success based on performance of Tesla V12, I would yada yada yada. Okay, so yeah, Kathy Wood does have Tesla at $2,000 per share by 2027. That is more than a 10x from today's price in 3 years. Does that hold water? Does that match my DCF? Let's find out. Now, what else do we have? Okay, Elon says supervised full self-driving just dropped in price to $99 per month. When? April 12th. Pretty recent, huh? Okay, so yeah, what the goal here is that FSD was $199 per month. It is now $99 per month. Now, the reason why this price is subtracted so much is two things. Number one, Tesla recently did a 30-day free trial for Tesla FSD. So you can get your car, try FSD for 30 days. It actually comes pre-installed. And when you receive the car, the person delivering the car to you is going to take you around and let you test FSD. They're going to show you how it works. So that will boost sales. This will boost conversion rates. And this will also significantly boost conversion rates because they're cutting the price in half. Now, the thing here is that this will not be a permanent price reduction. What this is I consider this to be the drug dealer model, for lack of a better word. It's the addiction price model. What they're doing is they're getting people addicted to FSD to get the conversion rates as high as possible. Then once people get just absolutely enamored by it, just totally in love with FSD, they're going to just gradually increase the price until they find a price where where it maxes out the revenue. Because the thing about FSD is it's nearly 100% margins. So it's all based on revenue. Almost all revenue goes to the bottom line. So yeah, they're just going to get people addicted at this cheap price, $99 per month, and increase it from there. And honestly, $99 per month, who wouldn't pay $100 a month plus the 30-day free trial? It's a no-brainer. Plus, you have version 12, which is currently out, and it's only going to get better from here. Another side note is the Tesla bot. That will be for another video because I can't value the bots. It's as simple as that. I cannot value it at all. Okay, so for this, I'm going to turn off my face. And you also have... Okay, so the next thing of discussion is the last reported quarter's financials. Okay, so 2023 was a tough year for Tesla, and 2024 will also be a tough year for Tesla. So you'll notice in Q4 2023, automotive revenues grew only 1% over the previous fourth quarter. And that's primarily due to ASPs falling off of a cliff. And Tesla is doing that in order to keep vehicle sales high, to keep the factories churning out vehicles as much as possible. However, on the bright side, energy is up 10%, services and other revenue is up 27%. Again, on the bottom side, the GAAP gross margin is down 612 basis points. Now, the thing here is, let's just finish this off. Operating margins down 784 basis points. Adjusted EBITDA margins down 652 basis points, and so on and so forth. However, free cash flow is up 45%. Cash and cash equivalents are nearly $30 billion. Okay, so Tesla is a healthy company. Tesla is the healthiest automotive company out there. There is no company that compares to Tesla in any form or fashion in terms of healthiness, in terms of the balance sheet, in terms of cash compared to debt and cash generation. It's just enormous. Okay, so the thing is, and Elon mentioned this at the end of the last earnings call, is that Tesla is between two growth waves. Okay, so you had growth wave 1, which actually lasted several years. It was the Model 3 and the Model Y. That began around 2019. So that lasted obviously 5 years, 4 or 5 years. And that's sort of trailing off and sort of flatlining because you can only grow the Model Y so much. The Model Y is currently the highest grossing vehicle in the world by units and by volume. So what else can you expect out of it? The only other real the only real new product that has recently come out is the Cybertruck. However, the Cybertruck's maximum capacity is going to be 250,000 units. It's not enough to really drive the needle that much. Okay, so that's growth wave number 1. Growth wave number 2 is going to be a lot of things. It's going to be the compact car, which we just discussed. It's going to be Robotaxi, and it's going to be FSD, among other projects. Those will start showing results in late 2025, according to Elon Musk. So between now and then, revenues are going to be basically flatline until that kicks in. The revenues growth is going to start going up again significantly. How significantly? Well, that's what this video is all about, is how significant that is going to be. And that's what I'm going to be projecting to you shortly. Okay, so for revenue, we have positives is growth in vehicle deliveries, growth in other parts of the business, and positive, okay, I don't care about foreign impact. The negatives are reduced ASPs and lower FSD revenue recognition due to FSD beta worldwide release in North America in Q4 2022, which was the previous year. Now, I do expect FSD revenue recognition in maybe this quarter, maybe next quarter, because it's no longer FSD beta, it's called FSD supervised. So they kind of changed the branding on it. So I'm expecting a new wave of revenues from that soon. But really what I'm more concerned about is the consistent consistent quarterly revenues, which again, I'll get into. So profitability, the negatives were reduced to ASPs, increase in operating expenses, partly driven by AI and other R&D projects. Lower FSD revenue recognition YOY due to FSD beta wide release in North America in Q4 2022, cost of Cybertruck production ramp. The positives were lower cost per vehicle. It's actually a significant lower cost per vehicle, including lower raw material costs like batteries, logistics costs, and the IRA credit benefit. Also positives are growth in vehicle deliveries and gross profit growth in energy generation and storage. Now, another huge thing is cumulative miles driven with FSD beta in millions. You can see it's skyrocketing recently. And actually, it's crossed 1 billion. It has crossed 1 billion miles just a couple days ago. And it's going to cross 10 billion miles soon, according to Elon Musk. Now, the thing is, the more miles that are driven, this is all data being transmitted to Tesla. And what they do is they're going to take this data and they're going to train FSD off of it to make FSD better and better. And the more miles there is, the better the data that comes in and the more data that comes in. And the better it will be able to train FSD as it goes forward. So the amount of improvement in FSD will be exponential. The amount of training data for FSD will be exponential. Moving on, the cost per vehicle sold is now just over $36,000. This will decrease when the Model 2 starts ramping. This will also decrease when the Cybertruck ramps further a little bit. You also have energy storage deployments. Now, the energy storage deployments has doubled from 2022 to 2023. And this is one of the bright spots for Tesla right now that will get them through this hump, is energy is skyrocketing. Now, energy is being produced only in Lathrop. The Lathrop facility is the only facility for energy. Tesla is currently building a new facility in Shanghai, which will have the same capacity as Lathrop. Okay, so Lathrop has the capacity for $20 billion per year in revenue. Shanghai will also have a capacity for $20 billion a year in revenue. Combine that together, $40 billion per year in energy, just from those two facilities, and there will be more after that. So that's a huge boon for Tesla. And actually, CATL, CATL, is also jumping on board, because CATL is also going to be selling energy, but that's actually competitors to Tesla. But it helps to prove Tesla's business here, because there's a lot of money to be made in energy. So moving on to the income statement, as you can see, it's sort of flatlined the last year, and actually operating income has declined, as the margins also have declined. Again, this is just a hump. It will fix. Cash flow, even though cash flow is flatlining, it's flatlining at a healthy level. And Tesla just continues to print money. They continue to print money, and they are investing this money. I mean, they got so many investments. They have the Corpus Christi lithium refining facility being built. They're going to start building Mexico soon. They got that new facility in Shanghai, and all these new things going up. They got the 4680 batteries in Austin. They have the Cybertruck ramping up. So many projects ramping up at the same time, and they're still free cash flow positive. That's amazing. Okay, so cash and working capital are increasing. Again, nearly $30 billion right now. Moving on. So for the balance sheet, the thing to look for here is total equity. This is the stockholders' equity. This is what you own of Tesla, effectively. So you can see that's a light green, and that just keeps going up and up and up significantly, especially last quarter. It went up a lot. Vehicles delivered last quarter wasn't so good, but the general trend is really good, but the last quarter was not. So Wall Street rates Tesla a hold. Average price target $192.73. Now, again, I have all these models up on my Patreon. I have a 7-day free trial, so check out my Patreon. You get 7 days for free. Okay, so I'm going to start off with the history. So I'm taking into the numbers now. So try not to fall asleep. Oh, by the way, guess who has fallen asleep? Shamao. She is fallen asleep. But I hope you haven't fallen asleep. Let's go back to this. Okay, so yes, we're digging into the numbers of my DCF. Okay, so the thing is for the DCF is I actually have 3 different models for you. So the first model I'm going to go over is the auto plus energy. This is what Wall Street analysts are currently projecting for Tesla. This is basically all they're estimating for Tesla. They generally don't estimate FSD, Robotaxi, Optimus, or anything else. It's just auto and energy. So I'm going to basically simulate what they're doing for this first model. I'll go through the other models in a bit. The next model will be including FSD. The model after that will be including Robotaxi. Okay, so going with that first model, just energy plus auto. For historical numbers, we have the revenue growing from $24 billion in 2019 to $96 billion in 2023. But yeah, you can pause here if you read them. If you want to read the numbers, I've zeroed out the stock compensation. I'll go over that later. Why I do that. Okay, so what is discounted cash flow? Basically, discounted cash flow is taking all future cash flows and discounting them to the present rate and basically saying that is the value of your company. That's how discounted cash flow works. And you can also read that if you please. It just means that you use a discount rate to project the cash flow, the discounted cash flow. And most people use the WACC for that, but there are a few other measures. He uses DCF. Honestly, a lot of people use the DCF, and it's used for various purposes. For our purposes, it's for stock picking and equity research. Do you buy, do you sell, do you hold? Basically, it says what price is this asset worth today, and based off of that, you can know, is this a buy, is this a sell, something in between. That's basically what that means. Okay, so I'm going to start off with the vehicle production chart. Now I kind of revise this every quarter, maybe every year, depending. So how I currently have it set up is from 2023 to 2024, I have it sticking at about 1.8 million vehicles, as you can see down here, increasing to 2.3 million in 2025, and generally traversing towards 15.85 million vehicles in 2033. As you'll note on the very bottom, that would mean that there were 81 million vehicles on the road at that time. Then I also estimate how much the adjusted EBITDA would be for the yearly sales at that particular year. Now, the reason I calculate cars on the road, you'll know in just a second, but there is a particular reason why I do that. And here it is in graph form, a little bit prettier, don't you think? Moving on. Okay, so you also energy. Energy's been growing fantastic recently. So yeah, for energy, I'm just projecting actually relatively modest growth rates of 50% in 2024, 40%, 40%, 30%, all the way down to 10% in 2033. That would get you a revenue of $57 billion. Now, honestly, I think I'm a little bit I'm a little bit conservative on energy. I expect the number to increase as we get more results from Tesla over the years and quarters to come. But I think I'm a little bit conservative on this because Elon has stated over and over again that he actually expects energy to exceed auto revenues. As you can see, this number does not exceed auto revenues. So we'll see. We'll see. But right now I'm keeping that conservative. For the WACC, the thing about Tesla and the WACC is their high beta. Tesla has a beta of 2.43, and that is a very high ratio. Anything above 1 means your volatility is higher than the S&P. So obviously Tesla is significantly more volatile than the S&P 500. And that's the biggest factor in their very high WACC of 14.98. Another factor is their very high risk-free rate. And that is essentially, the reason for that is interest rates. Interest rates are high, so the risk-free rate is high. That's basically, the risk-free rate essentially is the treasury rate. So here is my DCF valuation for auto plus energy. As you can see, revenues grow from $83 billion in 2024 to $612 billion in 2033, just based off of those two things, auto plus energy. Again, no FSD, no Robotaxi, no bot, or anything else. This gives you an unlevered free cash flow of $60.6 billion in 2033, present value of the free cash flow of $15.7 billion in 2033. I can't speak anymore. I can't think anymore. This gives you a terminal value of $1.2 billion. But you don't care about that. What do you care about? The stock price, right? Stock price implied is $227.55. The multiple valuation gives you an implied stock price of $257.92. For the multiple, the value in 2033 is $1.6 billion. So again, this is just auto and energy. So this is what the other analysts see. The other analysts, based off of these estimates, see a stock price, or going by their standards, I see a stock price of an implied stock price of $242.71. which is a 42% upside. Now, that is just auto plus energy. What else do we have? Well, next is FSD, full self-driving. Okay, so now this chart is a little complicated. Let me discuss this in a little bit. Let me explain this. So at the very top, you have the cars sold, and then you also have. I split this into two different sections. The first section is for the flat fee take rates or the flat fees. This is just the amount you pay, and then you get FSD for life. This is just based off of the cars sold and the percent take rate and the price. And then the second is the monthlies. So these are the people that choose to do their cars monthly. As you can see, it's been bumped down to $99 per month this year. Gradually increasing slowly to $300 per month by 2033. And again, the take rate currently, I'm estimating to be about 10% in 2024 for the monthlies, and gradually increasing to 50% by 2033. And as you can see, FSD is a monster going by these numbers. And this doesn't even include licensing. This is just Tesla vehicles by themselves. 81 million vehicles on the road. Can you imagine when Tesla reaches 200 million vehicles on the road? Just 81 million vehicles on the road gives them a revenue of $185 billion in 2033. Right there. $185 billion. For an adjusted EBITDA, this is equivalent to somewhat to cash flow of $148 billion in 2033. FSD is massive, assuming Tesla can pull it off. And here's the chart for FSD. So if you include FSD into the previous numbers, you get an implied share price of $700.46. Now you can see that Wall Street analysts do not include FSD at all, really, in their estimations. So if you do include FSD in your estimations, or if they included FSD in their estimations, I think these are the prices they would have to start issuing. And if they started issuing these prices, Tesla stock would triple overnight. Okay, so what's next? What's next is we have Robotaxi. Okay, so the thing about Robotaxi is first you have to figure out the costs. And the thing is, I'm assuming Tesla owns these vehicles. So assuming Tesla owns these vehicles, and the idea is they would, because Tesla or Elon said that they're producing a Robotaxi, they're unveiling a Robotaxi model on 8/8s with no steering wheel. So this would be a Tesla-owned vehicle because there's no steering wheel. There's no pedal, there's no brake, nothing. This is a Robotaxi-only vehicle. So this would be Tesla-owned. Okay, so you have a miles per year of 50,000, a tire lifespan of 50,000, tire cost of $500, the cleaning per year, $2,000, and the servicing per year of $200. This is per car. And now for per mile, you have the tire cost of 1 cent, the charging cost per mile of 3 cents. Again, this is estimated. Cleaning per mile of 4 cents, servicing per mile of 4/10 of a cent, for a total cost per mile per year per car of 8.4 cents. Again, this is per mile. So, and also depreciation and insurance are covered in the operating statement. Actually, let me rephrase that. Insurance is, depreciation is not. CapEx will be in the operating statement. You'll see that in a second. Tesla would want good quality tires to help prevent accidents, but can buy in bulk to reduce cost. Older cars require more servicing than newer cars, so this is averaged. We're not sure how Tesla's cars perform later in life, so this value is subject to change, yada, yada, yada. Nobody cares. Okay, so again, this is assuming a cost per vehicle of $25,000, salvage value of $5,000, useful life 5 years. I don't really do depreciation in this chart. I should just delete that. Ignore that. because I use CapEx instead. Insurance $2,000, registration $200 per year. As you can see, I'm assuming Robotaxi starts getting into gear somewhat in 2026, and just growing exponentially into 2033. You'll see in the top line, that's the taxis added for that year. The second line is the units salvaged for that year. Again, I'm assuming these have a 5-year lifespan. So you can see in 2031, there's only 10 units salvaged because that's the number of vehicles added in 2026. There's also revenues to be added from salvaging. So the taxis on the road grow from 10,000 in 2026 to 9 million in 2033. Miles per year, you can see there, utilization of 50%. Okay, so utilization is the amount of miles that are driven that are being billed. There's somebody in the car and it's being billed. So when the car is not utilizing, there's no person in the car that's being billed. And that's used to calculate the costs. Because no matter if the person's in the car or not, the costs associated per mile still apply. So the billable miles per year are estimated to be 75 cents. Or sorry, that's the price per mile. Billable miles per year are 25,000. The price per mile is 75 cents. This is the price that I am estimating that Tesla can charge. Okay, so the price that Uber charges is between $1 to $2 per mile. So this would undercut Uber and honestly, potentially put Uber and Lyft out of business completely and suck up the entire market to themselves. So you can see the revenue there. The cost per mile is 8.4 cents. The revenue increases from $188 million to $170 billion by 2033. You also notice the cost of revenues there grow from $42 million to $37 billion. Gross profit. Okay, so the thing is also, in terms of this particular component, this particular section of Tesla, I'm counting the cars that they purchase as CapEx, because they purchase it from a different department of Tesla. So for this department, I consider it to be CapEx because it directly influences the cash flow for this department. So the CapEx grows from $250 million in 2026 to $56 billion in 2033. It's mostly due to that the adjusted EBITDA is negative $1.1 billion in 2026. It actually grows more negative to negative $6.8 billion in 2030 because they're adding more cars to the road, and these cars cost money, lots of money. But then it turns around quickly. So by 2033, I'm estimating a positive adjusted EBITDA of $50 billion. And that is 30% of revenue. That would increase as time goes on, as more and more taxis get put on the road. And it would increase significantly from here. As you can see, I haven't projected out past 2033. I will soon. I would like to do 10-year projections, and we're still a few years out from Robotaxi, but $50 billion is really lowballed right now, but you can sort of estimate. Now, how much do you think this will add to Tesla's share price if this were included? Oh, and by the way, here it is in graph form. Well, if you want to figure that out, it's up on my Patreon. Again, there's a 7-day free trial on my Patreon. You can just sign on, download the spreadsheet, and honestly, if you don't like my content, within 7 days, just unsubscribe, and that's it. You get it for free. That's really it. There's nothing to lose. Oh, I not only do Tesla, I do Intel, I do PayPal, I do Snowflake, I do Palantir, so many different companies. Seriously, check out my Patreon. It is the best deal in the market. So yeah, If you like my content, don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.